a little changed. It did drop at the open, but has since sort of climbed back and is essentially where it closed last night, which was again yesterday a bumper rise after Monday and Tuesday, essentially reclaiming all the losses of last week. 8% down last week, 8% up the first 2 days of this week. Serious volatility, one might note. Let's bring in from Copenhagen, Ole Hansen, Head of Commodity Strategy at Saxo Bank. Ole, good morning. I'd welcome your thoughts on the market at the moment and in reflection, August as a whole.
Good morning, Sean. Well, we are really entrenched in a range-bound market here, and not struggling really to work out what leg to stand on. Once again, the virus having a negative impact, the third wave, and the market has been responding to that, together with a general weakness across the market. Worries obviously about the tapering and a potential taper announcement on Friday, the impact they may have on the dollar, the recent breakout in the dollar, which seems to have failed, all just pointing to some weakness last week. But I think generally the market is also worried that if we fall too much, we'll see OPEC Plus change their stance on production increases, and that will support the price. So our view is that we're stuck in a $65-$75 range, potentially well towards the end of this year. In the short term, still watching virus news. Well, clearly watching the dollar following Friday's FOMC, the Jackson Hole speech, and then next week, September 1st, we got the OPEC Plus meeting just to agree on whether they should stay the course with the arrangements they've made already.
Well, let's bring in Robin Mills, CEO of Qamar Energy. Robin, good morning and welcome back. Do you think there is any chance that OPEC could respond to these sorts of vibrations? What's your take, August as a whole?
Yes, well, I think Ole's point is well taken, that OPEC has this flexibility now doing these monthly meetings, has the ability to choose to go ahead with its production increase or not. And, we had a pretty bad week last week, and I think there was, maybe a chance then that OPEC would have thought about restraining its production increase. A better week so far this week, and I think that tilts it back towards the production increase still going ahead, and of course that tends to cap the moves on in either direction. I think if we don't get major new negative news, OPEC probably will, with current prices, will be happy to move ahead with the next phase of production increases. But if we'd seen the slump of last week persisting, they definitely would have given some serious thought to holding back, I think. But absolutely, it remains the gradual step forward on demand, but taking repeated knocks in various places. So we're not seeing the breakthrough in demand that we might have thought a couple of months back.
Rustin Edwards, Head of Fuel Oil Procurement at Euronav, sitting in Geneva. Welcome back, Rustin. One of the sort of moving parts of the last few weeks, of course, has been China and China's ability to deal with its latest COVID outbreak. It would appear that it has done so. And in, God, I've got something caught in my throat. The Chinese have reopened the Meishan terminal. They've had disruptions at their ports because of the COVID clampdown, which has sort of depressed prices. But now that seems to be unfolding again.
Well, I mean, the Chinese have been very circumspect in how they're reporting. They still have cases in China, but they're calling them imported versus domestic growth cases. So there is still cases being reported in China. It just depends on how they want to report them. So domestically produced versus imported cases, a case is still a case. So they haven't clamped it fully, but it is better than where it was, I think, at the beginning of the month. The Chinese demand for raw materials, they've had this massive clamps down on the tax evasion schemes that a lot of the buyers have been going through. I think that's still there. There's been information that about 30 to 40 VLCCs sitting off coast China looking to discharge. Some of that's holding Venezuelan crude, some of that's holding Iranian, some of that's holding normal crude. And a lot of that has to do with the cramp down that they've done on the teapots. So when you look at that from a demand perspective, how good is demand? I think our recent rally here has been more of an impact of the Mexico outage than anything else. On top of that, you throw in the lack of tapering from the talks of last week, and you've got a double whammy that's pushed the market back up, as you said this morning, up 8%. The Mexican outage could be a 3-week phenomenon because the damage to the infrastructure on nat gas going in to feed the fields, which then stimulates the production of the offshore Bay of Campeche oil structure. I mean, that's 450,000 barrels a day offline. And that basically negates OPEC's release for September.
Which is not an insignificant number when you say it. I think of it over 3 weeks. 3 weeks times 400,000 is multiple millions of barrels. Ole, your thoughts on this sort of swings? You'd said range bound, but obviously we were kind of caught in the 70s for a while. Now the range seems to have expanded, sort of $10.65 to 75 maybe. But ultimately, my question is, does this sort of wider range bound, this wider volatility, indicate as a signature perhaps of the monetary policy makers and fiscal perhaps as well, trying to normalize policy after a year in which we've had this dramatic easing and stimulus, and now this turbulence of trying to come out of that period? This is part of that. This will last. Your thoughts?
Well, yeah, because it just adds to the number of uncertainties we currently have. I think what we kind of grew used to when we had the tapering off of the latest the Delta surge was basically that we were focusing on OPEC Plus and their monthly additions or what they were going to do on the production side, because demand was basically humming along and starting to recover. Now suddenly the demand is uncertain, so that's adding volatility. And obviously, yes, with the monetary policy in the US up for grabs or up for potential change now over the coming months, that also will have an impact, or has been having an impact, especially on financial players. We've seen the speculative interest from hedge funds drop to a 9-month low. There's been continuous selling now for a while, even though some of those weeks where the market was actually trading range bound or slightly higher. So they have been cutting back, and part of that is the reflation story, that the inflation expectations are relatively muted right now. They are elevated, but they're not any signs just yet that they're going to rise even further, and that has reduced some of that demand. And if we should start to see some tightening, then the big question is really how much of that has already been priced in. I think the story is one that has been priced in to a large degree, because the US is drowning in cash. The banks are just handing back billions or trillions of dollars to the central bank on a daily basis that they can't find any use for, and that basically means that they need to get this liquidity out of the system, and I don't think the impact will be that great. So really, what is the question is where interest rates heading, and I think that's where we potentially already now may have seen peak growth already, with all the stimulus starting to come out of the system, both in Europe and especially in the US, and that basically means the need for much higher interest rates going forward. That's probably up for debate, and that also means that I think overall we're probably not going to see a major, I would say, commodity negative impact of a potential tapering.
Robin, your thoughts on that, and is it possible that only a week ago this seemed to be a certainty, tapering was going to be imminent, or at least the commitment to it? Now, only a few days later, the picture could have changed that dramatically. I mean, the data that the central bank watches clearly, hopefully just isn't CNBC headlines. I presume they've got a deeper well to analyze, and that would not have changed as much over the last week. Your thoughts on that?
Yeah, look, I think the US economic expansion remains strong, but the definite signs of deceleration, and you see that in the PMIs for the US and also for Europe. So that's perhaps one of the elements that's feeding in, that we have reached the peak of this perception, that we've reached the peak of this cycle. On the other hand, we do see significant strength in elsewhere in Southeast Asia, for example. We're definitely not at the peak of the cycle. We're seeing continuing strengthening in momentum. So it really depends where you look. I think obviously the US is looking at the US situation, but globally probably the situation is still perhaps a bit brighter and at an earlier stage.
Where would you put China in that picture?
Yeah, I think China's also is slowing for sure. But China's obviously also clouded by the resurgence of the Delta variant, and that's one thing that does concern me, because the Chinese strategy of complete elimination, it worked okay with the early variants. Now it seems to have worked with Delta so far with these very harsh and extreme measures that almost no other country could take. But will it? Because Delta is shown to be so contagious. Is there the possibility that it breaks out in China to the extent that it really can't be contained, or only by another absolute nationwide shutdown? That I think is not unfeasible, and it's coming into a country with still low vaccination levels, doubtful how efficacious those vaccinations are, and very little native immunity because the infection hasn't spread very very much previously. And that's a situation, in a different way, but you see it playing out in places like Australia as well. So that is a concern for me, the chance for breakthrough of Delta in some of the countries that so far have managed to pretty much avoid infection,
which don't have very high vaccination levels yet, and China still falls into that camp. The other thing, Rustin, we've talked about in the past, and I'd welcome an update on, is you touched on it in your earlier point, the supply chain bottlenecks that are curtailing economic growth, if you like, and we talked in the past the sort of Asia to West Coast America, a lot of delays there. Now we talked of delays in China ports. Where is that bottleneck issue vis-a-vis its impact on the momentum of the economic performance that is slowing down, as Robin identifies?
Well, the bottlenecks are still there because getting the basic support infrastructure inland of the port is where the problems are sitting on both sides. I mean, in the United States, trying to find a truck driver, which is used to move the boxes out of the port to wherever they're going, is a big problem. I know people who are in general trucking services, and they're having trouble hiring people. They've increased offers on hourly rates up $10 an hour from where they were maybe 2 years ago, trying to incentivize people to come in. I mean, being a truck driver in Los Angeles Basin right now is paying anywhere between $70,000 to $80,000 a year. Not a bad gig if you can get it, I guess. But still.
And also in the UK as well, there's lots of advertising for truck drivers.
And that's where the bottleneck sits, because if you can't move the box, you can bring in all the boxes you want into a port. If you can't get them out of the port, it stifles up the trade. I think China, with the latest COVID outbreak that they had there with Delta, I mean, that just exasperates the issue even more. And I think I said it here before, it's going to get dramatically even worse as we get into the holiday shopping season. So it's going to be a very interesting Q4 when it comes to container ship traffic. And if you look at the earnings that the container companies have been posting here, I mean, they're having record years. They're making more money in a quarter than they usually make in a year, which is phenomenal. Hopefully they sit on that cash to tide them through, but we'll see how that goes.
Yeah, it certainly seems in a lot of ways 2021 has so many unique pieces to it that we're looking to 2022 in terms of what might be normal again. But this year, in a way, Ole, 2021 cannot be seen as some kind of a benchmark reference. It's having so many unique features to it, including the continued record equities every day, every week. From that point of view, Ole, where does oil and the commodities sit in their unique own story? Are they caught in the same wave that is keeping equity all boats rising?
Well, obviously, we would like to say that they are living their own ecosystem, because it's ultimately supply and demand, where a stock market can still rally in expectations of what's going to happen in a couple of years' time for a company. But yes, we are in one big system, and we are responding to risk on, risk off, coming from signals coming from both the bond market and especially the stock market. I think overall we've seen a healthy correction now over the past months, also across some of the industrial metals. I see no reason why we shouldn't see a pickup in prices again as we move forward, because the demand is still strong. Supply bottlenecks, as mentioned by Rustin there, is most certainly relevant there. I mean, if you can't get the containers away from the port, you can't even get them back to the port and back on the ship, so we can get the empty containers back to the Asia. So this is all impacting commodities as well. Some of the commodities transported by containers across the world. So we are part of that whole system. Ultimately, as I said, supply and demand is what balance the market on a daily basis. I think we still see a situation over the coming months where especially energy and some of the metals will be in short supply, and that will continue to support the prices.
Ole, just to follow up, what does Bitcoin over $50,000 mean to you? What does it tell you, having sort of fallen back to 30 and now back up? I mean, this is obviously, is it a bellwether? Does it tell any story other than its own madness?
Well, apart from it makes it even more attractive for hackers to steal, and obviously also a market that you have to respect, because it is clearly attracting a lot of interest. Maybe some of that interest has moved away from some of the more speculative commodities, something like silver, which tend to be quite volatile, and where activity potentially has slowed from day traders moving to Bitcoin instead. But generally, it seems like it's living in its own system. We do sometimes, some days, see a bit of correlation to developments elsewhere, but otherwise it seems to be living on its own, and that basically means as long as there's one tomorrow that will think the price will be higher the next day, then the price will continue to go up.
Robin, in the general neighborhood of where we are, obviously Afghanistan looms as a big story, and it looms globally as a big story. I'm wondering your thoughts on its ramifications. What's the fallout potentially vis-a-vis Iran nuclear talks and other things that might be caught in this sort of geopolitical web?
Yeah, complex, Sean. I mean, obviously, beyond the human tragedy of people caught up in it, there's a lot of speculation about what it means for energy and geopolitically. I mean, I kind of divide that into, maybe 3 or 4 areas. Obviously, there's a question of the minerals there, lithium and rare earths and so on. Look, I think those are going to stay underground for an awfully long time. The Chinese have been trying to mine copper there for over a decade and have never really managed to get going. I mean, I'm sure they'll try and build some relations with the new Taliban government, but that's not going to be easy to deal with. Then there's speculation on pipelines going through Afghanistan. I think, again, you can rule those out for the foreseeable future, however much people like to draw lines on maps. And then there's the whole kind of reorienting of the Central Asian geopolitics and the diminished role, or the almost eliminated role of the US versus a growing role for China and Russia, and to a lesser extent other players like Iran and Pakistan, India, and so on. I mean, it's going to be messy and complicated, I think. And I think a lot of these countries will, however much they kind of cheered the US exit, they'll discover, or they're probably already aware, that this is actually more of a headache for them. It's
in some ways it makes, at least in this current window, let's see if it lasts, but ultimately Biden has taken a big hit. His credibility, his sort of honeymoon, you might say, is over. He wouldn't be able to take another hit with conceding anything on the Iran nuclear talks. My sense is that it really restricts his administration's ability to do a deal with Iran.
Yeah, I'm not so sure. Look, I think honestly, okay, it's a lot of bad headlines and so on amongst a certain part of the foreign policy community. We know this; it's pretty much in our neighborhood, and many of us, know Afghanistan at least to some extent. But the average American, to be honest, it's a far off place, and it was very little on the news in recent years. I think this, in terms of his hit to Biden's reputation, will disappear pretty quickly, and in a way, I think actually, in longer term, it frees up his hand. He doesn't have to worry about a huge number of US troops possibly exposed in Afghanistan, and he's made his promise. Messily, yes, but he's made his promise of ending the war and getting the soldiers out. And I think the Taliban is not a comfortable neighbor for Iran either.
No.
And actually, maybe there's some more room for actually cooperation with the US there. As
there was in the past.
Yeah. So I don't think this hampers the nuclear deal necessarily.
Okay. Let's go to the survey question and give everybody else the chance on the theme we sort of started out with. Oil is up more than 8% for the week, i.e. the first 2 days this week, clawing back the 8% loss last week. the big swinging volatility is here to stay as a signature of entering a period where policymakers are trying to unwind COVID stimulus, i.e. we're going to see greater volatility in this period as we move out of ultra accommodative into some element of talking tighter. Do you agree we'll see greater volatility in this new period of trying to unwind, or disagree? Agree or disagree that we will see bigger swings in this coming period? Rustin, where are we at with all things ultra low sulfur fuel oil, the whole that side of the barrel, the opportunities and the margins for refiners?
Well, the residuum side of the barrel is relatively strong, and it's got a big boost with the outage in Pemex, because if that's going to be an extended period outage, then you are going to see more U.S. Gulf Coast refiners looking for heavier sour oil to replace whatever they lose from Pemex. The big players on taking those barrels in are Valero, Chevron, Exxon, and their refineries are set up to consume heavy sour crude and destroy residuum to zero. So they need to have some of that material to keep the refineries fully running. The high prices and the structure in the fuel oil markets is indicative of low run rates. Bunker demand has not been good. It's actually been fairly lackluster, even with the high freight rates. You have too many ships sitting in port, not enough ships moving, which is causing bunker demand to trickle off and be low. I mean, if you look at the values of the ex-wharf prices versus the delivered retail spreads, they've been squeezed dramatically here for the last 60 days or so. The tanker sector is not helping with that whole sector underwater, and looks like it's going to continue to be underwater for the rest of the year at this moment in time, unless there's a dramatic change in the OPEC position on production. Dry bulk is still doing okay, but again, with the clampdown in China, that's looking at some headwinds coming up. And so container traffic is the only one that's really going to keep bunker suppliers and that whole bunker space moving along, and that's still roughly 40% of the world fleet. So it's not a big win, but at least it supports the markets. But still, forward margins are starting to come under pressure. I think a big piece is the strong price of nat gas is impacting a lot of the refining economics, and that's going to continue on as we go into winter because stocks are low. Part of that drawdown in stocks on natural gas liquids and natural gas comes from the fact that U.S. production has been actually pretty low, and U.S. was one of the biggest suppliers of NGLs to the marketplace. So with crude production 11.4 million, that means nat gas is nowhere near where it needs to be as it was in 2019. So if we get a cold winter in the Far East, there could be some massive shakeups in the whole residuum fuel versus LPG structures and prices.
Ole, we've seen in the last few weeks, obviously the Chinese have been significantly drawing on their strategic reserves. Now we have the US announcing the sale of 20 million barrels from its strategic reserve. We have the idea that there's offshore floating storage because of the Venezuelan and Iranian barrels sort of wandering in search of a home. Your sense of where we go with this, sort of, particularly welcome your comments on the release from the Chinese and the US Strategic Reserve and its impact for the market.
Well, it will just all add to the time it takes for the market to return to normality, and thereby also requires, I would say, patience from OPEC Plus in their attempt to return oil or production to pre-COVID levels. So it will have an impact on that. US makes sense that they are reducing their strategic reserves, considering how much their imports have dropped over the past decade. And you can see recently we've seen quite a big drop in Cushing, which has been supporting, giving WTI some local support. So there are plenty of space where these barrels can go and where they can be taken up. So the impact is just, I think, more for the longer term, that these are extra barrels that comes into the market that otherwise we would have required to come in from elsewhere, and that would have been OPEC plus.
Well, when you take the point, a fair point on the US side, i.e. proportionally, do they need to hold such a significant reserve given the import requirement? The opposite, though, in China's case, in reducing their strategic reserve, you would expect that they will look to refill those in the coming months, even if the price is slightly elevated.
Yeah, you would have thought so, but they have been very shrewd operators in the oil market, managing to buy lots of quantities at low prices. And China is important because it is the world's biggest importer. So data coming from China on a monthly basis indicating their take up of oil will have an impact on how the global market is viewed. So they could potentially send a signal through lower imports that which could have a soothing impact on the price to keep it from, or refraining from moving back towards these 80 levels, which are still being touted by some analysts.
Yeah, they seem to take somewhat aggressive posture against all commodities, didn't they, in terms of the release of strategic reserves in order to try and suppress prices. Let's get the survey result and give Robin the last word this morning. Okay, a whopping agree on that point. Greater volatility is coming. Given that, Robin, and obviously the essence of that, where does that leave OPEC, do you think, OPEC Plus, the idea of greater volatility, dealing with that? Are they likely to react to it? I was a little bit surprised earlier in the week when there was voices emerging, oh, OPEC need to look at this, OPEC need to jump in. I don't think they're sitting at the edge of their seats on that kind of reactionary moment. They seem pretty locked into their current path. Would you see any way that they would be shifted to act to stop increasing their 400,000 barrels a day per month?
Yeah, look, I think right now they should be acting as a dampener of volatility, as we said earlier, given their flexibility. But I agree, they shouldn't be driven by 1 week headlines, and I don't think they will be. I mean, yes, there is some volatility, and prices can be up or down a few dollars, as we saw last week, and I don't think that should drive their decision making.
I think they'd be probably in some ways more comfortable with the more 65 to 70 than waves 75 to 65.
Yeah, look, if the oil price was very solidly at 70 and was sticking there, then obviously they've got a lot of confidence to keep bringing back production. If they do see these dips down into the mid 60s, then that's a bit more concerning. But these headlines are very volatile. The Delta in China surges and then it fades away again, and speculation of the US Fed, all these kind of issues. They have to keep their eye on the longer term prize, which, as I've consistently said, is regaining that lost market share and trying to get back to, inverted commas, normal levels of production. And that has to mean continuing to add oil back to the market, even through some periods of market weakness. Now, if there's a major slump, then yeah, sure, they have to take a look and maybe hold off a month or two on production increases. But otherwise, they should just I think keep riding through this volatility, and that in any way also gives the market more predictability and a clearer viewpoint ahead of where will OPEC be if OPEC itself is not too jumpy and people are not always wondering what OPEC will do next. I mean, if OPEC has a very consistent policy as they've laid out so far.
Do you think, given what happened last month, when obviously the turbulence in finding agreement on this current policy was somewhat difficult, that they would be slow to reopen that Pandora's box, that fix is still fragile? Your thoughts on how solid that is?
Yeah, I think it's good that they've put that behind them. I don't see that being reopened in the near future. As we start approaching April next year, and the reset, having had the reset of the baselines, then there may be some further thoughts. But in principle, now they have a way forward through to the end of next year. It wasn't everything the UAE wanted, but it was quite a good concession. And again, early next year, maybe things will have changed, and maybe there'll be a view to adjusting the deal in some other way. But I don't think there'll be an impetus to try to reopen that immediately. I mean, that would just damage the credibility of whoever tries to reopen a deal that was reached so recently. Yeah,
and reached with some turbulence, and that's not welcome. Let's wrap it up there. Brent crude oil trading this morning in Asia just a little bit down, an insignificant 0.1 So pretty much holding on to its gains of the last 2 days, which is basically 8% loss last week. So we're back where we started, having gone through some turbulence. Let's see if that momentum continues through the week. If it did and you had 8% every 2 days, it would be pretty wild. So I would expect that will slow down. Thank you, Robin, from Dubai, Ole in Copenhagen, Rustin in Geneva. Really appreciate your insights coming back to us here as we come to the end of August, which is still feels a little bit like the silly season. All the big traders still down on the Riviera drinking their profits and probably back to work after Labor Day. We'll see. All the best. We'll catch up in the coming days. Thank you very much.
Thank you.